Assessor Sarah. I started here in January, so I've been here a couple of months. I apologize, I am a little hoarse today, so hopefully you can hear me okay, and you can hear me in Marshfield okay. I've been with the university about 18 years this summer. Seems way too long, and some of you I recognize faces. So I was here before, so I was in Marathon County for the past 10 years, but previous to that I was in Wood County, so I'm returning to this position. So kind of excited about that. So today we're going to talk about credit, and it just kind of seems interesting. I was talking with Adam beforehand that I know some of you came last month to talk about identity theft, and I said it seems like we can't go a week without hearing about some kind of identity theft in the national news, and I'm sure you've had people in your own personal life as well that have experienced some kind of identity theft. So there's lots and lots of things happening constantly, and it seems much more common than it was. So that's one of the things we'll talk about, very important, why working on checking your credit is really important. Okay, so first off, I want to know how many of you have gotten your free credit report in the last year? No one? Did you? Okay. Did you go on to annualcreditreport.com, or did you get it like through a bank or your credit union?
Through the bank.
Through a bank or a credit card or something like that. Has anybody used annualcreditreport.com? You have? Okay. No one? Did you do it on purpose because something happened, or was it because they just offered it to you?
No, I want to get credit, so.
Okay. There you go. Okay. So one of the things that and I'm glad you're all here for this purpose so you can learn. One of the things we do recommend, and you'll see a lot of our stuff in the beginning, we talk about 2266 and 1010, is that from annualcreditreport.com, and I'm so happy that, and I'm not a good singer, but that, do you remember that annoying commercial was freecreditreport.com? And I used to say, not free, don't go to that one. But they had that great jingle on TV, and everybody went to that one. We never recommended it. So the one that is pushed is annualcreditreport.com. And we do recommend that you do it 3 times a year. And so our campaign is 2266 and 1010. And the only reason we say that is because you can remember those months, because they're double-digit months. So from annualcreditreport.com, everyone is able to get 3 free credit reports per year. And the idea is one, if you're looking to improve your credit or track your credit to see what it is, you can do that. But then also just to see what's on your report. And so we'll talk about that as we kind of go through this. But the idea is that you should never have to pay for it. So if somebody sends you an email or offers you something and says, oh, send me $10 or $20, you should never have to pay for your credit report. You shouldn't have to pay for additional services or things like that. There are tracking services, but you can do it yourself. So annualcreditreport.com is the one to go to. The biggest thing and we'll talk about it today, that we want you to do is to look for mistakes. So a lot of times there are mistakes. I was sharing with Adam beforehand, I had done a health fair last year, seems a long time ago, but it wasn't, it was last January. And it was up in Rhinelander, and I thought, and it was all vets. And the thing I was doing was exactly this, and as people came up, I was asking, have you checked your credit report in the past year? And I was keeping a tally on my computer, and I said to him, I actually still have that little sticker on my computer because it was so compelling that over the course of the day, I had 57 individuals tell me that they had their identity stolen within the past year. And I was thinking, holy smokes, I got in my car, and I've been doing this a really long time, but I thought, wow, this is really high odds for a small community. And it just so happened that when I went back and looked, they said that those who work for the armed forces and our veterans are at higher risk because when it comes to, it's the government, and hackers see that as a challenge, and so they want to get into that even more. And so they, just by who they are, it put them into a higher risk category. But every single person I asked, have you gotten your credit report? They all said, it was a lot of older folks, they said, my credit's great, I don't need to check my credit report. And I said, but that's not what it is. I want you to see that there's not someone else looking into it just like you are. So you need to make sure that you keep it that way. So, okay. So There's lots of things, and I think, again, we're a little naive, and I think more so in the past year, you've heard about some big things. A couple years ago, there was the big Target breach. There was just the one with the Bureau. There's lots and lots of things. I think we hear about things all the time, so it's more common than it used to be. But, just local statistics and things, there's really, it impacts a lot of people. And it's less than 50% of Americans actually check their credit report. And as we saw in the room today, most of you don't. So it's one of those things that someone else could be out there using your exact name with your exact initials. I did this program last fall, and a woman said there was someone in Wisconsin that had her first, middle, and last name. All three names, also lived in Wisconsin and showed up on her credit report. So every other thing on her credit report was not her. It was the other woman with the same first, middle, and last name. So she had to dispute a significant amount of items on her report. So it's a lot of different things, but do encourage that it's important that you do check. And like I said, a lot of people don't. So you're not in the minority. There's a lot of them out there. Annualcreditreport.com is where we want you to go. And like I said, it's a really low percentage of people that are using it, so that's why we're trying to push it and let everybody know that this resource is out there, because a lot of times it's the paid ones where they want you to pay for it that everybody sees because they have great commercials and they're out there, but you don't have to pay for it. So this is your right. Everybody gets it, and it's a great service. And it kicks you to all three bureaus, so you can get one from each of the three bureaus per year. So that's where we want you to be able to use it. This goes back a few years, but in 2012, they found that 1 in 5 individuals who checked their report had errors. So that's really important. Again, it's pretty high odds. So that's what we want you to look for, is to see if there's any mistakes on there. And we'll walk you through to think all the different pieces. So when you actually go in to look at it, there's different categories as you pull up your report. So in the very beginning, it asks about who you are. So like I said, it'll give you addresses of where you've lived. And I've had individuals that say, well, I've never lived it'll give you, different, and you might say, I've never lived in Baraboo. So then you know that someone in Baraboo was trying to use your identity or it applied for credit or using your identity. So there's different pieces in it that will show up that you can look for throughout the whole thing. So they may have never actually, you can get down to the section where they actually open lines of credit or where someone has applied, and it might not show up there, but it might show up in the address piece. So you can look through the different sections and see where it might be. Okay, so what is your credit report? So a lot of times people distinguish the difference between what is a credit report and what is your credit score. And we'll go into a little bit of both between the two. So your credit report is actually everything that you've done since you've started obtaining credit. So it's a history of all the things that are you and everything that you've done ever since you started. So a lot of times I'm working with individuals who may be young adults, and they might go for a loan, and they might have zero credit. They might not have anything because they haven't put anything in at all. Or on the opposite end, we've had people that might have a lifetime of choices that also show up. So that credit report shows everything that you have done. And some people will say, well, I've never had a credit card. I don't have credit. Well, that's not necessarily true, because there's other things that show up in there as well. So this is a history of all the things that you have done. And we'll get into who is using it and who's pulling it, and other things will show up in there too, besides just, so it's not just accounts. So you might have never had a credit card, but you will still have credit and you will still have a credit report. Does that make sense? Okay. So there's 4 types of information. So in the beginning I said your personal, so that's who you are, your name, your address, where you've lived. And a lot of times when you go on, and we'll talk about this in a little bit as well, but when you go on to get your free one, especially if you do it online, it'll ask you your personal identifying information. Has anybody tried to do that? Okay, sometimes it's difficult to be able to do that, because especially if you've lived multiple places. So when I first started doing this, I had a lot of individuals tell me they couldn't get past the security questions. And I'm like, oh, that's not legit. So I went on and I had tried. Well, I had lived on the East Coast. I went to college in North Carolina, and we lived on the East Coast for 10 years. And the first couple questions were like, what is the address of your bank in 1992? I did not know the address of my bank in 1992, and it was Wachovia, and Wachovia has now gone out of business. It's not even in existence anymore. So it's not like I could look it up. I couldn't pass the security questions. So I then know, and I was able to work with others, that that's okay. So don't get discouraged if you go on, especially if you've lived multiple places, that if it asks you some kind of obscure questions, just keep kicking it and it'll give you new questions. If you do it multiple times and it keeps giving you questions that you don't have the answers to, then we'll talk about this. You can do it either on the phone or in the mail. So there's ways to get past it. But I usually tell everybody, don't get discouraged about that personal information, especially when you're trying to pull it up and give up. Because a lot of people will get really mad and they'll say, oh, forget it, I'm just not doing it. Nope, that's for, you want it to be that way, that's to help protect you so that not everybody can get in. So it's that difficult for a reason. But so they'll ask those, that's just to get in. But then once you get in, it's a section about all the places that you've lived. And like I said, you want to see to make sure that, are they all places that you've lived? And if there's ones that you haven't, then that's a flag. And you can see, nope, that's not one of my addresses. And that's something that you can correct and double check. Then there is your account histories. So these are all the accounts that you've opened or you've had, and it'll say if it's current or if it's closed, and it'll tell you the year. So it'll say where it's at. And each one of the reports of the bureaus is a little bit different, and they have a little bit of a separate format, but they all have 4 of these same categories. So these will show up on all 3 of them. So you might pull each one and you'll go, oh, it looks a little different. It does look a little different, but they all have the same categories. And it'll all say your account histories, and it'll say if the account is open or closed. And if it's closed, when it'll tell you the date that you opened it and the date that you closed it. And it'll also say if it was open or closed in good standing, or if it was closed in good standing. So that stays on there. Public record. So this is things like, do you have judgments against you? Was there any court records? Anything like that, that will show up on here. Evictions, that will show up on here. So things that were public record, that will all show up on there. And then inquiries. So when you said your bank, or if you go in for a mortgage, or if you go to buy a vehicle, that's an inquiry. They're going to pull your credit. So that's going to pop up on here. This is really important because if someone else is trying to get a loan using your information and it pops up and you can go, yeah, the last time I did it, mine had shown up and it said in Minneapolis. There was like a whole bunch of hits, like 6 or 7 hits in Minneapolis. And I'm like, yeah, I was not in Minneapolis and I have not applied for credit in Minneapolis. But it ended up that it was our mortgage company was housed out in Minneapolis, and once a year they do an annual recheck and it popped up as Minneapolis. So when I had contacted them to see what it was, that's what it had come through. So definitely check into that to see where it is and who it is and how often they're doing it. We'll talk a little bit about this. There's things as soft hits and hard hits, and that will affect your score. One of the things I will pop in here, because it's a common question I get, is when you do go to apply, so let's say we're car shopping, and we do want you to shop around, and a lot of times people will say, well, don't go multiple places because every time they pull your credit report, it's a hit and it'll decrease your score. True or false? What do you guys think? False, why?
Because you're shopping around, so you are looking for the best deal.
Correct. So they give you 7 days. Well, I shake that back. Maybe it's 14. I apologize. I said it and then it sounded wrong when I said it. I think it's a 2-week window. I apologize. So you do get a very short-term window. So when they do give you time to shop around, and so if you're going for, let's say, a vehicle shopping, you could go to 5 different dealerships and it's going to count as 1 hit. But let's say you're very indecisive and you go this month and then you wait 2 months and then you go again and then you wait another 2 months and you go again, then it's going to count as a hit every time. And then it will decrease your score every time. So the answer is yes and no. So it will it will drop, and it's not a lot. It's a couple of points and the reason is that every time you do, it's potential credit that you could take out. So every time somebody pulls it, it's potential credit, whether you actually do take it out or not. It's what it could possibly be. But well, they do want you to shop around. So they give you a window. So no matter what it is, they give you the window with the ability to be able to shop. But know that you have to try to do your homework ahead of time. So hit consumer reports, check around beforehand, so that when you actually do shop, you do it in a short time period and not spread it out over 6 months, because that will count as separate hits. Does that make sense? Okay. Okay. And then this also, all of this information and all 4 of those categories, that gets melded in, and that's what goes into your score. So all those things dive into your credit score. So your credit score is your 3-digit number, and your 3-digit number is a little bit different with each one. So each bureau does use a little bit different of a range. So some people say 3 to 800. Some of them are 250 to 750. They are a little bit different with each of the ones. But this really is really what is deciding whether you get, it's your risk. They're deciding what your risk is. So someone else is using all these factors and all that information in those 4 categories to determine what your risk is that you are going to repay your debt back. Okay? So that's what they're saying. And so there's lots of different pieces that go into it, but ultimately, and there's formulas, and like I said, the range is a little bit different with each of the 3 bureaus. Does anybody use apps or anything to check your credit, like Credit Karma or anything like that? Okay, so there are some free apps out there that will monitor it for you and that are safe and recommended. But you'll notice that if you have those and it'll pull them up, that it'll be a different score on each one. And it could be quite different. Like it might be 50, 60 points different. And you could be like, how can that be? Like, how can it be 60 points different between the 2? But if you actually look into it and you pull your report from each of those, you'll notice that maybe your credit union reports to one bureau and not to the other. And if you have your auto loan through one, it's going to show up on one and not on the other. That's going to affect your score. And every time you make an on-time payment, that improves your credit. So there's different pieces that tie into it. So not everybody is required to report to all 3 bureaus, so your score is going to fluctuate and be a little different. Most of the time they're similar, but again, not everybody has to report to all 3 bureaus. Does that make sense? Okay. So these are some of the free ones that are available and are out there. Some of your financial institutions, so your banks or credit unions, offer it for you and they'll monitor it. Some of your credit cards will monitor it for you and send it to you too. And those are all okay. Like I said, if you have something that says to you, we'll do it for you for $10 or $20, don't. It's not necessary. There are plenty that are legit and free that you don't need to pay for an additional service. Questions on that? Okay. Okay, so why check your credit report? So I kind of went into most of this already, but the idea is that there are lots of different examples of identity theft that's been out there, and whether it is something on a national level, like I said, like an Experian or a Equifax or Target, like a national breach, or Quick Trip. A lot of people use the get cash from Quick Trip, and their numbers have been stolen from using the machine at Quick Trip. It doesn't make a difference where it comes from. The idea is you need to keep on top of it just to make sure, because technology is changing and it's all the time. There's lots of things that are used besides your getting a loan that go or into your credit score that it's used for. So things, for example, I apologize, I'm really bad at following this along. I'm going to jump ahead. But things like getting insurance. So hopefully all of you know that when you go to get an insurance, I can't talk today, rate, and they give you an estimate for your insurance, that's based on your credit score. And that didn't used to be. So 10 years ago, that wasn't how it was. That is how it is now. It is based upon your credit. So there's things that are there. Some employers are using your credit score. There's also other things that apply into it as well, like if you're renting, and some landlords use your credit score as well to determine whether you are again, they're going to see whether you're worthy and whether you do pay on what you owe. So it all goes back to that credit worthiness. So a lot of times, again, people will say, well, I don't have a credit card, or, my score is good. But it's not necessarily just that. There's other parts of life that feed into it as well, and that's what makes it important. So there's the whole identity theft piece and making sure someone else that isn't using yours, but then there's all these other things now that are factoring into it as well, that even if you never have a credit card, you still need to check it, because there's other parts of life that will utilize it as well. Does that make sense? Okay. Questions so far? Okay. Okay, a couple of things I didn't talk about. So a lot of times, most things stay on there for 7 to 10 years. Federal things will stay on indefinitely and a little bit longer. So when I say that, so some tax issues, student loans, things like that, if you're in default on federal things, they stay longer. Otherwise, most things fall off in the 7 to 10 year range. So if you have older debt or things that are much older, it will fall off of there. So you'll notice that it does fluctuate and it changes. So again, that's something else to look at to see. But you will notice that, again, when you look at account histories, it'll still, like if you had a bank account that you opened in, again, 1990, it'll still show up under that account range that's when it was opened and that's when it was closed. So that is still on there. No one else is checking this for you, so there isn't a little magic fairy out there for everybody that says, oh, mistake. I wish there was, but there isn't. So that's why we have things like this campaign, 22661010, telling you, check it 3 times a year. It's free. It's out there for everybody, because there are so many ways that hackers can get in and get to you, and you want to make sure that someone else isn't using your identity and having credit on your behalf, good or bad. So it's really, really important. And again, you can get your 3 per year from annualcreditreport.com. So the Fair and Accurate Credit Transactions Act was passed in 2003 by Congress. And the idea behind this is that you get one every year from each of the 3 bureaus. So this is your right. So when I said that earlier, that everybody is entitled, you are entitled. There was a law that was passed, and that gave you that right. And I've said it multiple times today. What are the 3 bureaus?
Equifax, Experian, and TransUnion.
Correct. Okay, so again, you can check them. So we generally say split them out 3 times a year, just so that if you are tracking your credit score, or if you're making changes in your life, you can see that if you're making improvements, and then you can see that if it's making if it's actually moving in the right direction. But if you actually think someone has stolen your identity and you want to see if it actually has been fixed, you can pull all 3 at the same time. So there's nothing saying they have to be spread out. So let's say I get a call and something has been hacked. I can call and I can get all 3 of them tomorrow. So I can pull all 3 to make sure. So you can pull all of them at one time, that's fine. But we do recommend you spread them out, because you get one from each of the 3 bureaus, and you can then track to see if you're making changes throughout the course of the year. And I will pass out little things that give you reminders that will send you a little reminder. We have a campaign that will prompt you 3 times a year to go on and check it if you want, if you haven't already done it. Okay, so this is our campaign website. And again, it just shows you that you can goes through all the different pieces. If you do have an error, how to fix your error, walks you through how to read the report, all the different sections that I've kind of talked about and what's in there, and kind of takes you through all the pieces. Okay, and I already asked this, so no one has had issues trying to get it before. So like I said, typically the most common thing is people can't get on to get it when they try to do it online. But most of the time what I tell people is if you can't get past the online one, try a second time. And if you still can't, you can either just call them on the phone and then they'll mail it to you, or you can fill out, you can print out an online form, or I have them, and then you can just mail it in. It takes a little bit longer, 14 days is what they say to mail it to you. If you print it out or if you go online, you get it immediately. It kicks right back at you. So, but my biggest advice is just don't get discouraged, because if you can't get past the first couple of questions, people usually their immediate response is anger. So don't get discouraged. I usually tell people, if you know this in advance and you kind of expect it, then you kind of go in with the attitude of, I got it. And then you feel like successful, like I did it. And then you get on. So, so it's good. So you can use the website, like I said, or mail it in, or call. So here's the login. These are some of the questions that they a lot of times ask. So they'll ask, where have you lived? If you've had multiple places in the last couple of years. And like I said, usually when people have trouble is when they have moved around multiple locations, multiple addresses, because then they'll ask more questions. They'll ask to identify the images, and that you get on a lot of different websites. And then again, they'll have you pick a bureau. If you do have an issue, let's say you would try Experian first and you can't get past the security question, go back and try the next one. So then go back and try Equifax. You're probably not going to get the exact same questions. So then just try the next one. Then maybe you can go back the next time and try Experian, and because it's just a computer generated questions. So they'll kick out different questions to you each time. Okay. So this is some of the things that come through in the verification. So this is an example. Your credit file indicates you may have a mortgage loan opened in or around June 2009. Who is the credit provider on this account? And so then it gives you the options. So you can pick which it is or is not. Your total scheduled monthly payment on the above referenced mortgage is blank. Or you can do none of the above. So it's asking very specific things that only you would know. And sometimes it's about, like I said, where you've lived or different things, but it's really specific things about your identity. So a lot of times I'm working with one spouse or the other, and they're trying to pull it, but they don't know the information. So I'm always like, yeah, if you're not the keeper of the knowledge, get your spouse there who's the keeper of the knowledge. And you chuckle. If you chuckle, you know what I'm talking about, because it's not always everybody is the keeper of the knowledge in every house. So if you don't have the information, make sure that you're together when you do it so that you can ask the other person the information. Okay. Okay. So then, like I said, you can do the request by mail. And you do have to prove your identity. So they will ask you for your social security card or a pay stub with your social security card or a copy of your W-2. Again, they want to just make sure it's you. So if it's just another way to safeguard it. So a lot of times people are upset by that, but it really is, it's just another way to protect you. So here's an example from Experian. And that's just what the first one would look like. And again, it's free, so there isn't a cost. All of these also do have additional things that you can add on. You don't have to, so don't feel like you have to add an additional package or anything. Just do free. Okay, so now that you have the credit report, what do you actually do with the credit report? So the first thing is start at the top and go through the whole thing page by page, every line, and look for errors. So like I said, you're going to start with where did you live and are all these addresses you. Then you're going to go to the accounts. Were these my accounts? Are they all closed when they were supposed to be closed? That sometimes is a very typical mistake. So it was an account that you thought you had closed 5 years ago and it still says it's open, or vice versa. It says it's open and really you closed it. So go through the accounts, make sure that, and it might say it was closed not in good standing, and you're like, yeah, I paid off the loan. That is in good standing. So go through line by line and make sure that every single section, every single piece is correct, all the way to the end when you get to the inquiries. Because like I said, it'll tell you when and where somebody also pulled your report. And so then you can see that, is this me or was this not me? Because it might be that someone pulled it, but then they never actually went through and opened anything. But it'll let you know if someone else was trying to use it. But like I said, it might be, like in my example, a lot of times we do have credit, but through a company, like I said, your mortgage or your car loan, and they sub-use it out to another company. So it's buried and you wouldn't know what it is. So sometimes you have to do a little bit of digging to find out, oh, yep, that's in Phoenix, Arizona. It really is my bank down the street. But they're using a company out of Phoenix, Arizona. So sometimes it looks a little sneaky when it shows up on there, but that's good for you to know kind of what it is and who's actually pulling it. So start in the very beginning, go line by line throughout the entire thing all the way to the end. And if there is mistakes, then what do? So then you have to contact the credit bureau. So each one of them is different, and you do have to contact them separately. Excuse me. So if you find an error, you do need to correct it on all three, and you don't contact you. Excuse me, you would want to contact whoever it was through as well. So let's say, like I said, it says I had a loan that wasn't paid off, and you're like, yeah, I closed that loan 5 years ago. Before it gets taken care of on your credit report, they're going to need proof from that institution that it was. So you contact the institution, get proof, get a letter saying, yes, that account was closed. It was closed in good standing with the date. And then you would forward that on to the credit bureau, and then they take care of it. So generally it goes pretty well. In cases of where there's identity theft, it can get a little bit trickier because there isn't always proof, but contact them as soon as you see something. So, and you have to contact each one of them individually. So there isn't like a universal one where you can contact one and then that's it for everybody. Questions on that? You guys are a quiet group today.
We're supposed to do just one at a time. So if I go to Experian and I find that there's a problem with the one on Experian, I won't know if TransUnion has the same problem unless I go there.
Right. So generally, if you do find a mistake, then we say go ahead and pull them all. Yeah. If you see that there is, if something's, especially if it's, so if it's, so when you say mistake, do you think, are you meaning like mistake in reporting, or mistake as in somebody like identity theft?
Well, like you said, maybe you had a loan that was closed.
Yeah.
That
So.
closed it open.
Okay, yep. So if you did that, then I would go ahead and get the proof, take care of it with the financial institution, and then you can actually contact each one of them, and you can send it to each without pulling your credit report. Because more than likely, if it is on one, it's on the others, and if they didn't, it's okay. So it's not going to hurt anything. And like I said, some loans aren't reported to the other one, and that's fine. But if you do think there's a mistake, sometimes it behooves you to go ahead and check them all. It depends what it is. If you're worried about your score and you're trying to improve your score and you think it will improve it, so like that, in that case, yeah, that'll make a difference, then I would go ahead and be proactive and fix it across the board. And if you go to, so without pulling your report from each, you can go to each of the ones. So you can go to Experian, TransUnion, Equifax, and it'll give you the address to fix reports and where, fix mistakes and where to send it to. So right on the front page of each one of those, it'll give you an address of where to, an email address and a mailing address of where to send the information to. So you can send it in. Other questions about that? Or other things? Okay, so I kind of covered this in nausea already, but so again, personal information, things like addresses, employers, where you worked, kind of go through it. Public records, like I said, things like judgments, courts, other things, kind of go through it. Is there anything, again, don't panic if something's on there. You're just trying to make sure that it is you and what is. The negative items kind of go through, and is it correct or is it incorrect? And again, If something did go into collections, again, make sure that if it was paid off, it says that it was paid off and where it's at. So every one of them will have the payment status, and it'll say where it's done and was it where it was completed or not. So, and it'll also say if it was open, if it was closed, and when it was done. Okay, then it'll have the rest of your accounts, again, kind of, again, same status, kind of where it goes through, what it is. And then the last piece is what I said is the inquiries. It'll show who pulled it and when. And a lot of times these are really obvious. A lot of times it's not really obvious. A lot of times it's just a couple of initials in a city, and you have to do a little bit of digging to find out who that is or where that is, and what that's associated with. Because a lot of times it's shell corporations that are associated with financial institutions now that are doing, they're contracted out to do the inquiries. Okay. So other things, check your dates on your judgments and other kind of legal proceedings to make sure that it's corrected, and also to make sure that if it was fixed or justified, and that it shows up on there. Because, so let's say there was an eviction on there, but the dates are really important. And then, because if you have a landlord that's going back to look at that now, you will be able to say what time period it was and when it was. So those are really important. So don't focus on just when it was on there. Make sure that everything is correct, and even your dates. So something as silly as a date, I go, well, it's an eviction. Nope, because that might be part of your story. You might say, well, I was a freshman in college and this is what happened, but your dates need to be able to jive. So don't blow something off, just make sure every single piece of it is correct. So you can also do, the optional is the personal statement. That's where you can explain something. So sometimes people will do an explanation to go with it. And then a soft inquiry is something that you see those, and that's when you request to see it yourself. So we talked about this quite a bit. When you're going through and you're looking for errors, and like I said, you can contact the credit bureau and the creditor or whoever it was to try to fix it immediately as soon as you find it. And then you can try to dispute it. And like I said, each one of them has a different process. So it'll state right on the front page of each one of these, as soon as you go to their home page, it tells you the steps for disputing it right away, and who to contact and how to make, to fix those errors. Okay. Oh, look at that. I talked too fast. So let's talk a little bit about improving credit. So can you tell me what's the number one thing you can do to improve your credit score?
Make your payments on time.
It is make your payments on time. Do you know what percentage of your credit score is made up by on-time payments? Anybody? It's about 35%. So the bulk of your credit score is made up by how much and how consistent you're actually making your payments. And when we pull your report, it actually shows a tick for every payment you make on time. And so then each one of them, like I said, each report looks a little differently. So some of them will have a check mark for every one that you make a consistent payment, and some of them will have, when you miss one, it'll show a check mark if you miss one, like in the 30, 60, 90 days. But that's what they're looking for and so when someone pulls, let's say a financial institution goes to look at it, that's what they're looking for, to see how many times in the last 30, 60, 90 days have you missed a payment. And a lot of times one missed payment can drop something as much as 40, 50 points. So it's huge. So those consistent payments are really, really important. And I usually tell people that no matter what it is, and this is from working with financial institutions for a really long time, before it even gets to your credit, try, if you know that you're going to be late, contact them before you're late. So if you contact them before you're late, you have a lot more options. So they can do a lot of things. They can skip a payment that month. They can change the payment date and they can tack it on to the end. There's lots of different things, but as soon as you miss a payment, then it takes you out of the running for all of those options. So always try to contact. It doesn't make a difference what the creditor is. If you contact them, even when you think you might miss a payment that month, then they have options to give you, and they have wiggle room, and they have an ability to work with you. But as soon as you miss a payment, then that's when they don't have that ability anymore. It like takes you out of one category and it puts you in another. So just know that that is the biggest bulk. Then the second one is the amount of debt that you carry. So a lot of times that's the one that people think is the biggest, and reducing debt, and it is, but that actually comes under those on-time payments. So I usually tell people, nope, really consistently making on-time payments is very, very important. And so a lot of times when we have some people who have no debt at all, and they don't have an ability to make a payment, they actually have a lower credit score than someone who has maybe poor credit but is making consistent payments. And they're trying to figure it out. And the idea is because every time you make those consistent payments, that's working on that score. So keep that in mind. Not that I'm telling you to go out and open credit, but one of the things that we do recommend is if you are trying to improve your credit score, there's something like a secured credit card. Have you guys heard of, do you know what a secured credit card is? So a secured credit card is different than a debit card or a traditional credit card. You can go to your financial institution and you would actually take your own money. And so let's say you take $500. I think most of them, the minimum is $500. And you'd say, I'd like to open a secured credit card, and you would put $500 down. They would order you a credit card. It looks just like a regular credit card. It's not a debit card. It sounds like it because you're putting your money down, but it's not. It's an actual credit card. But you put $500 down as collateral on it. So that's out there. And then you start back at zero, like you would a regular credit card. And so then you would charge on it like you would, but you wouldn't be able to exceed the $500 that you put down. So you'd still have to pay it off every month. You still have to make your payments, but it's a way for you to get a good interest rate and to make those on monthly payments every month to improve your credit score. So that's one of the ways, and you're not taking out, it's not reducing your credit score, and you don't have to run the risk of getting in trouble with like you would with a traditional credit card, where you could run it up to $5,000 and then you're further in the hole. With a secured credit card, it's the max of what you put on it, and it's your own money that you're backing it with. So that's one of the things that we say, you know, that's a way that you can kind of do a safeguard, protect yourself, but you're also improving because you're making those monthly payments. The other thing we recommend is using it for things that you automatically normally do. So gas. You have to put gas in your car every month. Put gas on there, just like you would, and then every time you do it, then you're going to turn right back around and you're going to pay it off every month with your cash. Food, your groceries, do it for things like that. So a lot of times people will save their credit for things that are extra, but then you're not necessarily making those monthly payments. If you are specifically trying to improve your score, then we recommend you use it for something that you would do on a regular basis. So food, gas, where that you're going to be able to charge it on a weekly basis, and you're going to be able to turn right back around and pay it off. So it's going to be within your means. It's something that you have budgeted. You know exactly what it is, and you're going to be able to pay it right back. So you're going to have a really good history of charging it, paying it, charging it, paying it, and it's going to be consistent right back. And that is going to really help your score, and it's going to pop up. Does that make sense? Okay. So then once you get kind of, you can work on that, then you go into, again, then the second thing is your debt load. So then we usually tell people to try to go with low-hanging fruit. So if there's anything out there that is smaller amounts, try to pay off your smaller amounts first, and then keep that payment that you had and tack it on to the next one. So then you can make those consistent payments, and then they're compound, and they'll build up on the bigger ones. So if you had a car loan that was, or only a couple $100, or let's say on a camper, and it was, $200 a month, you paid that off, then instead of just not having that camper payment, then take that extra $200 and put that onto your mortgage. So now that you have that additional and you're compounding it, and it's just going to keep building and building, so then you're going to pick the other ones off at a faster rate. So whatever you were already paying, as you pay something off, keep that payment and just build it into the next one that you have, so that it comes down at a lower, faster rate. You all just look so serious. I know, it's not a fun topic. Questions? Yes, oh, go ahead, sorry.
I was just gonna say, what's considered a good credit rating?
Oh, okay. So if it kind of depends too. So if you kind of, again, if you kind of go from each bureau, but 650 to 7 is the good to fair. And then 7 to 850 is where you're going to get a better rate. So if you were going into try to get a loan, if you're above 700, that's the range that you want to be in. So that's, you're going to get a better interest rate the closer you are to 700 and above. So if you're below 650, then you're going to be in the range where we're going to say, you know what, you really need to try to improve it. And the 650 to 7 is kind of the border range where somebody would give you a loan, but you might be paying a higher interest rate. So, and they all kind of fluctuate. So each one of them is a little different, but that's kind of a, so it's not a steadfast, but that's kind of a generic answer. Is that helpful? It's kind of a, so it's a little different. So if, I bet if each one of you went to your financial institution, they're going to give you a little bit of a different answer. But ultimately, 700 and up is the goal, because each one of them has, a, like I said, some of them go to 8, some of them go to 850, and some even go to 9. So it just depends. But further above you can get above 7, the better you are, and you're going to get a lower interest rate. So, and like I said, that 7 to 650 range, you're going to get a loan, but it's going to be a higher interest rate. And when you drop below 650, then that's when you're going to be in that kind of higher risk. And it just kind of depends. So it depends who the lender is and what you're going to get. So, and I think in today's day and age, we have a lot more lenders that will give you loans. So we have a lot of national lenders that will give loans, but they're going to give them at a much higher interest rate. So you might be paying 17, 21, 25, 30% on a loan, but you have a 500, a 525 score, and you'll still get a car loan, but you're going to be paying 18, 20, 25%. Whereas if you had 725, you could get 2%. So it's just kind of where things are at right now. Whereas, 15 years ago, you probably wouldn't have been able to get that loan with the secondary score. So a lot of people call them predatory lending. And actually, that's kind of in between. There are some places that if you went and checked loans right now, we have some that go up to as high as 800%. So there's some laws that have been changed to really try to, that tried to change to get rid of some of that, but there's still a lot of it out there. So I really tell people, check your options, even when you think you don't qualify, and if you think that you are, in that lower range in your risk factor, go to your financial institution and ask your financial institution first, because even if they can't help you, they're going to tell you what you need to do, and they're going to give you better options than going to some of the other ones. But a lot of times people feel pushed against the wall, and if they need a vehicle or they need something, then they're going to be able to take it. So.
Just one more. You said your debt load versus your income. Is there a percentage of your income they consider? Does it actually lower your credit score? Say I make 50 grand a year and I got 300,000 in debt. That's too much. So the answer is yes and yes.
So the answer is yes. So it does lower your score. And so if you went in for a loan, they will tell you that. They'll say, you know, you might have your percentage is too high. So your debt ratio to your income is too significant. So that's one of the things that they do look at. Off the top of my head, and just because I'm drawing a blank and I have sick fog today, I'm not going to answer what the percentage is. But if we go actually on this website, there's a great little pie chart that actually tells you for each category what it should be, and it'll kind of take you through the whole pieces. So I encourage you to go in and check, because we do have that, and we have a nice little handout on that. But that is one of the things that they do look at. So the answer is yes. That is most of the time, especially for a financial institution, that's what they're looking at. So that's pretty important.
So if you pay a large amount on your loan or paid it off, does that bump your score up then?
It does, yeah. So as soon as it does get paid off, then it will I can't talk. I was going to say it will go down. It doesn't. So as soon as your debt goes down, your score will go up. But it's always funny because people will say it doesn't go up as fast as it went down. So it usually goes up much slower than it drops. So like I said before, it'll drop by 40, 50 points the second that the day after you miss one payment. But you can pay something off and it might improve by like 3 points. So it goes down really fast and it goes up really slow increments, but it does. So it's one of those things that, yes, just kind of keep at it. A lot of times it's, as you watch it, especially over a long period of time, as you do reduce it in increments, you will see that it'll keep going. So let's say over a course of a year, if you paid down your mortgage by $10,000, you'll see that your score maybe went up 15 points. So it does pay off. I mean, it does go it's just not as fast as the other one drops really fast, and the other one just goes up in slow increments. Yep.
What about credit cards? I'm talking like Target card, Yonkers card. I've got one, but they're all, I pay them off. Is that, someone said if you got a bunch of cards, that lowers your score too?
No. So yes and no. So again, it goes for total debt load. So every time you have one, even if you keep it at 0, that still is potential credit that you could have. So it's hanging out there like you could go tomorrow. So even though you've had it for 5 years and you don't have it you don't have anything on it, you could go tomorrow and you could charge $5,000 on it. So it still is a capacity. So it still is there. But right now, one of the things, so the third thing in your pie of what your score is longevity of credit. So how long have you had credit? So if you've had a credit card for 10, 15 years, if you've had the Sears card for 15 years, and even if you haven't used it, you're probably going to hurt yourself more by closing it than you would not using it. So a lot of times it's important to keep that open just for that reason. So we used to tell people to close accounts, and we don't do that anymore. We say it's more important to use them and use them smartly than it is to get rid of them, because we know that longevity of credit is important in your score. So keep that in mind too, that if you have it. The other thing, but the flip side of that is if I'm going for a mortgage and I know that I'm going to be going in to purchase a mortgage, and I'm going to be shopping around for loans, I'm not going to go and try to open 3 or 4 different store cards, because that is going to take a big potential, and that might all be 0 and it doesn't make a difference. That still takes a big chunk of what my debt load is. So then that takes it away of what I could be putting towards my mortgage. So I may have never used these, but it doesn't make a difference because it's a percentage of my debt load when I go in for my mortgage. Does that make sense? So we usually tell people, once you're pre-approved for something and you go in, don't open anything else and just freeze it, because you're locked in there, and that could really affect it. So just kind of keep it. But yeah, the recommendation used to be if you had cards that you weren't using, get rid of them, chop them up. Credit cards were bad. We used to say, oh, no credit cards. We don't say that anymore because we know that if they're used well, they actually can really work to your benefit. And the fact that longevity of credit is really important, and that is the third and most important thing on your score. So that does help too. So, yes.
I think I know the answer, but I want to ask it anyway.
Sure. And maybe I have an answer. No, I'm just
I think
teasing.
you will. There are certain things that you have to have a credit card to apply for, to do.
There are.
Hotel rooms and
Correct.
such like that.
Rental car?
Rental cars, different things. You have to have a credit card or you don't get it. What I do is I have a Walmart debit card that I preload and use it on those occasions.
Yep.
And I was wondering, because it's counted as a credit card when you pay for something,
No.
they don't record that.
Nope. Because when you opened that Walmart credit card, you did not put your social security card down, and it did not report back to your social security. So everything in your credit report is with your social security number. So those
Actually,
prepaid.
it does. My Walmart card does have my social security number.
Okay. But I don't think it's, double check that. I don't think the prepaid debit cards, maybe the Walmart does, most of them do not show up on your credit report.
Okay, I'll have to check it, but I was just.
Check it. So the generic answer, maybe that one does. The generic answer is most of them don't. That's why we recommend you do the secured credit card, which is the exact same thing, but through your bank, because that is reported to the credit bureau. So whereas your prepaid, you are doing the exact same thing. You're putting X amount of money down and you're able to use it. If you do the secured credit card, which is the exact same thing, you take X amount of cash, you go to the bank, say put it on this card, but they report it back to the credit bureau. So it's helping you and it's improving your credit score. So that's why we say prepaid, secured, go secured every time.
Is a secured account then connected to? One of the reasons I do that is because my Walmart card is not connected to my bank account.
No, so you can have it not be connected. So you could go to any financial institution. If you wanted to walk into, what's down the street, River Valley Credit Union down the street, and just say, I'd like to open a secured credit card, and you give them the money, you can open a secured credit card.
So
Yeah.
like
An
another-
area that
another
actually
debit card.
compares credit cards to know which one's the better sticker to have.
So the Consumer Credit Bureau does, yes, they have, they'll actually go through and give you kind of like consumer credit reports, but it's for financial institutions, and so they'll actually give you the kind of rundown on them. So in closing, I do recommend everybody goes to annualcreditreport.com. If you, Adam, will you? Okay. If you sign up for our 22661010, when those months come up, we actually will send you the state. It comes from the state of Wisconsin. We'll send you a little reminder to go out and check it, and then your statistics actually get popped in with the rest of the state, so then we can use your numbers. But nothing else is kept. It doesn't. We don't do anything. It just actually says whether you checked your report or not. But if you have any questions, or when you're actually doing it, if you have issues like you can't get in, come in and let me know. I've actually sat down with folks at my computer and said, okay, let's go in, and I'll help you get in, and then I'll just hand you the report. So if you have any difficulty getting in, I'm willing to do it with you one-on-one to get you in, and I'll just hand you the report and off you go. Or when you're reading a report, if there's anything in there that you're like, I don't know what this is, and you want to go through it with me, let me know and I'll do that with you too. Because I've also had folks that have come up with stuff that they're not really sure what it is. So contact me either way and I'll help you. Thank you.